welcome to the Capital Discussions Market Analysis. I'm Tom Nunemaker with our host, Jerry First. Before we get started, I have a quick disclaimer that Capital Discussions is not a broker-dealer or an investment advisor. This presentation is for educational purposes only. We don't know your situation and have no way of knowing what level of risk is appropriate for you. We're not making any specific trade recommendations. The risk of loss in trading options can be substantial, so please be aware of all of your risks prior to placing any trades. Hypothetical computer-simulated trades are believed to be accurately represented. However, actual profit or loss may vary due to market factors such as liquidity, slippage, and commissions. So with that out of the way, and this is on all of our web pages at the bottom, this is a reminder. I will pass the ball to you, Jerry. And how's your week been? How's it shaping up? I see we have a FOMC meeting coming up this week.
Is it FOMC? It's the notes, I believe.
Yeah.
Yeah, so that's going to inject some volatility most likely around 2 o'clock or so. Let me go ahead and get my screen share here. On Wednesday, I believe.
Yep, exactly.
Share screen order 2.
I see it loading.
Okay.
There we go.
All right, very good. So here we are. This is the week ahead, and this is Monday, May 18th, 2015, 4:30 Eastern Time. The markets have now closed, reaching all-time highs. So it's another historical or hysterical day on the markets. And just a quick glimpse over to say, well, we'll look at the S&P 500 briefly real quick and come back to it. You can see that on the futures, we're still moving a little bit, but we're closed right here. Breaking new highs. And if I was to shift that out to a monthly chart, there we are in the grand scheme of things. How about that? Anybody have altitude? Go ahead.
Oh, it's just going one way.
Yeah. If you've got altitude sickness or fright, we are up there. And hold on one second. So these are the main events according to Bank of America Merrill Lynch. Housing starts came out today. Building permits, they were a little disappointing this morning. Wednesday, on the 20th, as Tom was alluding to, all of these are Eastern Time, 2 o'clock FOMC minutes come out. Most of these, as I always say, are reasons and excuses for volatility on the markets. So whether these numbers beat or in line or disappoint expectations, it's good usually for some momentum to be injected on the markets. So later on the 21st, we have existing home sales and Friday consumer price index month over month. So that's the short list over here from Bank of America Merrill Lynch. And if we were to go over to Capital Discussions, let's go ahead and you've got access to the Capital Discussions calendar.
Yeah, you want the login link.
Right. I just hit it. Here we go. So here you've got your upcoming significant events. I always want to make sure that nothing catches me by surprise. And as Tom has programmed over here, these are just the red and yellow star. These are like the main events to watch. But then if you click on the calendar up here, it'll take you out to the Econo Day calendar with all of the relevant events. And if you click, if you're not sure of any particular indicator or event, you could click on leading indicators and read up on what that indicator is, what the definition is, and sometimes they'll give you actual history as to what it's been like in the past. They also have on the Econo-Day calendar market focus and international perspectives and some other commentary. So it's all it's a place to go ahead and take a look if you want some information for the week ahead. So let's go ahead and take a look. For those of you who don't know who I am, Jerry First, been running Investors Education Network since 2002, live events educational since South Florida. My first meeting that I ever did outside of South Florida was at New York Traders Expo in 2006, Times Square, on the same stage as Larry McMillan and Tom Sosnoff. And so just in case you're wondering, who is this guy? And I've been doing training on technical analysis and charting. I've considered to be pretty good at it, and also do coaching and mentoring and working with options and OptionView user group coordinator from 2003 to 2006 or 7 when they stopped their user groups, but pretty good with OptionView as well. All right, so this is something that I want to draw your attention to. I've got some screenshots of the S&P 500, the live chart, as I've got right here. You can see this is the monthly chart. You can see the Twin Peaks, not to be confused with the biker bar in Texas that got shot up over the weekend. Interesting events taking place all over. But take a look. I'll go ahead and draw some Fibonacci's over here from this peak over here to this bottom over here. And you can see we've got 161.8 extension coming right up at we closed on the futures today 21.29, and we're talking 21, just call it 21.40. So we got a little bit of resistance coming up. Now this is a monthly chart. If I was to drop this down to a daily chart, you can see the sideways action and the triangle pattern that we broke out of here. And so you can't argue with an uptrend, and you can't fight the Fed, so hold your nose, and as some people say, buy the effing dip. And so let's take a look at some charts, though, going back. Let me go to the slideshow and maximize my screen. And so here's the same chart, but I want to draw your attention to a couple of indicators here. On balance volume, this is out of Telechart 2000, TC 2000. This green line is showing you the on balance volume, and you've got the 22-period moving average underneath that. And even though it's a monthly chart, you can just see that the upward pressure is pretty good there. What I really want to draw your attention to is the past two peaks over here and over here. And take a look at the indicators on the MACD as one of them, where you've got the MACD running in positive territory. A lot of people teach and talk about indicators as being overbought and oversold if they're over 70 or under 30. The problem with that is that you can obviously see that a lot of these indicators, such as stochastics and MACD, can stay overbought or oversold for an awful long time. What you want to do is look for patterns, and you want to look at other conditions where these indicators will give you stronger confidence. A lot of people who don't understand technical analysis, or maybe they're not good with computers, or they just would rather work off of raw statistical data. The whole idea is putting the odds in your favor. It's all about high probabilities. Anybody that thinks that they have the magic holy grail crystal ball that's going to give them the keys to the kingdom. There could be. There's a lot of, I live in South Florida near Boca Raton, and I see a lot of private jets flying in and out of the Boca airport. And so, however, let's take a look here at the MACD.
Although, Jerry, although I believe in the old adage, he who lives by the crystal ball is destined to eat glass.
Yeah, well, yeah. Okay. Jim, good to hear from you. How you doing?
Good, sir. Good. It's the challenge with any crystal ball is that it works until it doesn't. And what ends up happening and by the way, this is true of any type of arbitrage strategy. As soon as it's known and people start to end up making money from it, it gets too crowded and then the trade goes away. So really, there's nothing that takes the place for, good overall technical analysis, I think, so that you can see when there's fear coming. And that's what these meetings are here. And, Jerry, that's why we thank you for presenting every Monday.
Yeah, glad to do it. And you bring up a couple of good points and things that I always think about when it comes to back testing and forward testing. I think that back testing is fantastic for ruling out what doesn't work. If something only works 30 or 40% or 50% of the time even, you're kind of flipping a coin. If you've got something that's going to work better than 65% of the time, now you go ahead and what I do is start to go ahead and try to add the odds in my favor by taking that high probability and adding other high probabilities to it. What I want to go ahead and talk about a little bit today is I'm doing a presentation on exit strategies live in Delray Beach, Florida this week. And so one of the things is looking for patterns on indicators and looking at multiple time frames. So looking at the long term, we got the monthly chart of the S&P 500 going back to 1995. You can see the market top of 2000 and the market top of 2007, and we have not finished topping out here yet. You can see that the 22-period moving average has been holding support quite nicely, and even look at that little spike down right there. Just came and tapped that right there. So look at the 2000 to 2003, to put it in the shining type phrases, a little correction. Right here, the MACD, which has been maxed out, starts to break down, and you can see that the histograms, which I don't place too much significance to the histograms, but just to point out that the MACD is starting to get tired. And also what I like to look at is a RSI 14 indicator, and notice that that starts dropping below this 45 range. We also have a candlestick pattern where at the top of a run, even on a monthly chart, we have a nice decent size up bar followed by almost an equal size down bar. Now they have a couple of different candlestick names for that. I forget which one it is. I'm not going to look it up right this second. But there's also a tweezer pattern that this is also somewhat representing. It's showing a reversal. Candlestick patterns are excellent at trying to find the reversal patterns, but you have to back it up by other indicators. Notice that we then had a test through and slice of the 22, and we closed below this 8 exponential, and then we came down, and basically that 8 exponential moving average almost on any time frame seems to keep you on the right side of the trade. And so you can see in 2003, just around the time that I believe that was the beginning of the Gulf War, that was when things started to turn around. So notice now the 2007 to 2009 correction, where we've got this run up and right up into the top of 2008. Notice that we're testing the 22 moving average. Then we tested the 50-period moving average. We closed below the 8 and below the 22. So there's your first heads up that we're starting to have a little bit of trouble on a long-term chart. And then we went ahead and started to crater. And notice we're starting to look out over here. March of 2009 was the ultimate bottom for that correction phase. And notice these two lines towards the bottom of the chart. That's the current trend channel that we're in today. So this chart is also the monthly chart from 2008 to 2015. What I'm showing you here is this is the whole shebang from 1995 to current. And now this is the current chart, screenshot taken last night. And what I want to show you here again, the MACD, okay, we're still, we're not really turning over yet. We got a couple of nubs on the histogram that are kind of ticking down for the last few months. We've been going sideways. People have been waiting to see how this triangle was going to play itself out. Let me bring it up on the TC charts. Gold I'm watching right here. I'll come back to gold in a minute because that seems to be in play right now. But here is the daily chart of the S&P 500. You can see on the 1-hour chart, we've broken above this resistance level where we had 1, 2, and then finally broke above that today. Of course, this is all for educational purposes. I'm not making any calls that it's now a green light to go long. You need to be able to make that call for yourself. However, it does look as if, as I said, do you want to fight the Fed? Do you want to fight the trend? Right now, my indicators are pointing up. Stochastics are pointing up. RSI, I would just want a little more confirmation to the upside. MACD is still positive. And my ADX indicator, I'm looking for the blue to cross over the red. Now remember, okay, so this is a daily chart. Over here we got the weekly chart. We just started. And notice these hammers. Now, a true hammer pattern is going to come like this. It's going to stick, the tail or the wick is going to stick out at the bottom here. So taken by themselves, you can call these hammers, and you can see that this one is actually kind of sticking out a little bit below here. But we definitely, this is much more of a hammer and a morning star pattern back here as far as candlestick patterns. So an interesting day here. Again, Monday, May S&P 500, but also on the Dow. Breaking above resistance as well. 18,300. What really has me a little bit concerned is when we do have these quote-unquote corrections, 5% a few times a year is not out of the question. You can see these pullbacks here once, twice, 3 times. But then we're really looking for flush outs and real distribution where you're going to have maybe as much as a 20% or more correction. And so those are great buying opportunities if you can hold your nose and trust your indicators and start taking a stab at the market. But right now, the big question is it real? A couple of weeks I was talking about, of all things, and Jim, don't hit the mute button on me, but Beavis and Butthead had a great episode called, I think it's called Candy Sale. And so the kids are in school and they have to go ahead and sell candy bars, and they finally found one person to buy a candy bar for $1, and then the two of them Beavis and Butthead went down the street, and with that $1, they kept on passing it back and forth to each other until they ate all of the candy. It's a great lesson in how money how it moves around and how it can be great for the economy, and how $1 passed back and forth created all of that activity. And it also talks about how, like, the teacher went ahead and gave him the candy to sell, kind of like the institutional broker that says, get rid of this inventory.
See, Jerry, that was fine. I only have to hit the mute when you talk about religion or politics.
I was just coming to that. I was just getting there. My favorite website. So here, volumeless VIX. I'm just kidding, Jim. Just trying to make you nervous. So the problem is, yeah, I haven't dropped any F-bombs yet. But yeah. So I was talking to a good friend of mine the other day, and he goes, do you know that you just dropped about 15 F-bombs in the last 2 minutes? And it's like, really? But I've been doing webinars now for a long time, and I'm usually pretty good about it. So the question is, yeah.
I grew up in Queens. I went to school in Brooklyn. If I can end up curbing it, so can you.
It all depends on if I'm talking about politics or religion, yeah. So, the question does become how much volume is there? Think about that analogy. I'd love to go ahead and find that episode and potentially have enough time to show it, or at least go off and send you guys a link. Because imagine $1 being passed between two people. It's a great example of how, if there's no volume, just a little bit of money can levitate the value of something, whether it's a stock or an option or currency. But then guess what? There may not be any, the classic line of all crashes is that there's no bid, that there's nobody on the floor and everybody turns their back. In the old days, they had to go ahead and corner people with a badge on their vest, and they'd say, you have to make a market. Now they've got computers to do the job. So, yeah, we'll see. We'll see what happens. Can I find any political financial execs? San Francisco Fed, Atlanta Fed, David Stockman. This is one of my. What do you think about Apple? A proxy on the market? Yeah. So
we have actually several clients on an institutional base. We have several extremely large retail clients that have Apple that have started to end up asking us to hedge. A lot of them were afraid of after last year, if the iWatch sales don't add significantly enough, that there's a little bit of fear that Apple's not going to, turn around and sales going to go down or anything. But even if their rate of growth slows, that's when people start to end up getting worried about it. And it's been just so strong that eventually the law of large numbers, for them to keep up the percentages that they've been growing, it becomes harder and harder, every quarter.
Yeah, exactly. It's interesting. When you talk about Apple, I like to go ahead and sometimes remind people about AT&T. AT&T, once upon a time, had pulled as much as $500-600 a month out of my long-distance bill. And AT&T was cratering until all of a sudden Steve Jobs went ahead and gave them the exclusive on selling the iPhone. And the iPhone was effectively subsidized, by AT&T. And it was a great symbiotic relationship. And Apple, like AT&T, because the world moves so much faster, my example of Apple is that I'm also on the board of directors for AAII down here in South Florida, and we had this visiting speaker that was managing about $500 million, saying that what I do is short-term trading, risky, and people should give him their money to invest and trade with. So I asked him, I said, is Apple a trade or an investment? And he would not answer my question. And so he's a smart guy, unlike these people running for president who can't answer what if you would. Well, anyway, so he didn't answer the question, because the truth of the matter is Apple, just like AOL or BlackBerry, or even American Can Company. I love opening up my old technical analysis books, looking at these companies that used to be on the top of the market, and they're nothing but a bunch of crocs. And where's Crocs these days? $15. I mean, you know, not going to get that call. So it's one of those things where because of the computers and the technology, we're now able to go ahead and work with a lot of good leverage and a lot of information that we never had access to as fast as we had, as least expensive as we have now. You know, but, and also the ETFs have also changed significantly the actual ins and outs of, let's say, the Dow 30. Because why would people want to go ahead and try and have to pick which of the blue chips out of the Dow 30 if that's their, you know, in their bylaws, when they can just buy an ETF and pretty much have it covered and still have money left over to try to go ahead and then pick one or two out of it. So let me go back over to my presentation for a second, and then for those of you who have questions about technical analysis, or if you have a stock that you'd like me to look at, go ahead and type it in. And
Jerry, there was one question. Did you see it about do you have an intramarket view of the transportation index?
Not necessarily, no. I haven't been following. Usually, if you wanted to follow the, you know, the Dow Transportation Index, it's once again it's been skewed. The longshoremen's or the port strike that took place in California a couple of months ago has completely skewed. It's kind of like a snake that swallowed a rat. And that's going to have to work itself out, because you've got that bump in the road that's going to come out over the next month or two as an aberration, because so much import and export and all the transportation. It's the biggest port, I believe, for California. All those ports over there, and a lot of these numbers, it's unfortunate, whether we're talking non-farm payrolls or any of these other things, it seems as if a lot of this information now is so skewed that I really I watch the charts. You know, I can't really gauge anything by having spies all over the country counting how many cars are you know, when I say railroad cars are leaving, you know, whether it's Detroit or San Diego. It's tough to gauge. So I like watching the VIX. I like watching the major indexes, the subsectors to catch momentum. But you know, there's my short answer. So HSBC came out with a report over the weekend talking about the world economy is like an ocean liner without lifeboats, and if another recession hits, it could truly be a titanic struggle for policymakers. So you can go ahead and Google this, HSBC Global Economics Titanic, and you'll get the PDF document on this. And you're seeing a lot of, what's actually very bullish is all the people who are calling for a market crash. So having said all of that, so far, again, disclaimer, no communications, live or electronic, should be considered as financial trading advice, as Tom said in the beginning. So let's go over to the live charts. And I don't know, I'll start out with Jim and Tom. Have you got any individual symbols that you'd like me to look at besides GLD? Go ahead and type them in. Gold has been an enigma for the past year or two. And if you take a look here, here's the weekly charts. Notice we've been breaking down through this wedge pattern, and we're still in the middle, even though we've had a nice run up over the last, this is a weekly chart, we've had a nice little run up. Every time that a lot of people have tried to go long gold, it's hit its head either up here at this top of this trend channel or somewhere in between just to get slammed back down. So is this time any different? Don't know. But we are at a midpoint. So for those of us who are options traders, which I think a good percentage here capital discussions are, you know, lots of good potential trades with resistance up here at about 1265, and then two support levels here, 1158 and 1100. How does that relate back over for some people who use the ETF proxy? Let's go ahead and let me go ahead and bring this up to a weekly chart. So these are my multiple time frames here. I've got my weekly chart, daily chart, and then I'll zoom down into a shorter time frame, 30-minute. And you can see here this trend channel is to the downside, but we're starting to move up. And we've got this resistance level up here at about 120 with good support at 114.60. Double bottoms here at about 110. Indicators are pointing to the upside. So it looks like if I had to make a decision, me personally, not you, I'd probably have to go along now that we've broken the resistance of not only a Fibonacci cluster, but also 22-period moving average. I'm sorry, that's the 50 right here. This is the 50-period moving average right here at 114. That's 200. I am corrected. I'm sorry. That broke the 200, ladies and gentlemen. That's definitely a signal of a potential course correction, crossing the 200. Any questions there?
Looks like we had a couple of requests for IBM and Apple.
Okay. IBM blue chip had this gap down on the last earnings play, looking like they want to fill that gap at about 180. And it's got this saucer pattern, which you could even kind of say is an inverse head and shoulder pattern. And you could also say that there's even a triangle here. Okay, so we have multiple patterns inside of IBM, all pointing somewhat to the upside. So we've got shoulder, head, shoulder, we've got the triangle, and then we've also got another smaller triangle at the right edge. And notice this head and shoulder pattern has actually now been stretched out, so it's almost breaking out of a head and shoulder pattern. I want to see it right around this point right here. So it's kind of been dragged out, so this head and shoulder pattern's kind of like negated. But we still have this triangle pattern with the breakout, decent little pullback. And if I was to go ahead and put on my Fibonacci's here, I'm going to tighten these indicators up a little. It's one fib from there to there. And let's go ahead and do another one from here to here. We've got this fib cluster and moving average supported about 171.65. The obvious direction is to the upside on the daily chart. As I was saying, the gap over here at 182 wants to get filled. So we've got a good target right up around here. Something about these charts, I mean, I really like how the multiple time frames here, the weekly, I draw this line over here on the weekly chart, and it moves and puts it very quickly and easily on the other chart. Indicators on the daily are positive, 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 and positive. So if I had to make a decision, I'd probably be going long. That's me, not you. Who is asking? Let me see here. Jim Riggio is asking about IBM. What's your personal bias there, Jim, on IBM?
They've been the worst performing stock in the Dow for 2 years in a row. From a business perspective, they've gone through just some incredible cuts. I think that over the long term, they go down. However, over the short term, you pointed out that gap. So I do think that there's upward pressure until 180. But they have to get above 180 and then come back down and test it before they make me a believer.
Mm-hmm. I agree with all what you're saying there. The long-term outlook on IBM, unless if they figure out a way to reinvigorate themselves, they better pull themselves out of a nosedive. I mean, look at, wasn't Xerox at one point, a blue chip? I mean, they've got to figure out, then they went into services as well. So they've got to be careful. And I'm not, for some reason, their current CEO is a darling of Wall Street. She can't seem to do anything wrong, even though she hasn't done anything except try to join up with Apple.
I worked in Ginny's group when, 25 years ago when I was there.
So it's your fault then.
No. She's an amazing woman. She really is. But I think she's got an incredibly difficult job in front of her.
Yeah, she does. But I mean, I remember, was it Lou Gerstner? Who took over after, in the early 90s, he did a turnaround.
Lou Gerstner. He wrote the book, Who Says Elephants Can't Dance?
Yeah, he really did, he redesigned IBM, although he did sell a lot of their hardware assets and went into the services. So, you can only cut and cut and cut until you're stuck with a bunch of temporary workers and temporary cubes that have temporary allegiances. So I could dig a little deeper into IBM as far as.
I think unless people want to end up seeing deeper, I didn't want to end up hijacking. I just wanted for you to end up sharing with people, because I thought there was a lot of interesting patterns going on in it, and that's why I thought it was a good example to go over.
It was definitely. There are a lot of patterns between. Yeah, look, you have gap, a failed inverse head and shoulder inside of a triangle with a triangle inside of it. Yeah.
Gary, somebody else was asking about CME.
Yeah. And Andrew also was asking about. Yeah. I was working with a guy named Andrew Spanton briefly. He'd set up shop. He opened up a little currency trading outlet across the street from the Seminole Casino in Hollywood, and he was a character. I don't know if maybe this is Andrew Spanton changed his name to Stanton.
No, I think we should just talk about CME graph.
All right, because otherwise I can pull up my Forex charts. So the CME, okay, talk about monopolies. I mean, they own everything, right? They own the CBOE, the CBOT, and I don't know what is left. Speaking of IBM, over on the PS2 manufacturing line, they had this big Barnum and Bailey-like globe, and it said "At the End of the World, Gang." And I remember talking to one of the directors. It's like, what does that mean? It's like they say at the end of the world, there's going to be at this point, I guess CME is, as long as we have a market, we're going to have the CME. Where else are you going to go? Having said that, that's not a recommendation, by the way. That's just my opinion. We've got an uptrend. Of course, I've got some contacts at the CME, and I was invited to a few different events and even some dinners with them. There was John Henry down here in South Florida. They did an event, a private event for John Henry, and I was there, and I was speaking to one of the directors from the CME, and this goes back 2006, 7, 8. After they've been public for a while now. And it's interesting as far as, being hacked. It was after it was almost very shortly after the flash crash is when it was. And I was just, I ask the wrong questions of the wrong people sometimes. I'm asking about the security. I'm asking this director. It's kind of like asking American Airlines, what the safety is on their onboard entertainment systems. But I digress, as usual.
And the chart says?
The chart says we've got a short-term upwards target of 97.93. Can we make money on 3 points from 94.92 to 93? Yeah, maybe. We're going to run into this fib cluster first where we're at right here, 96.15. You could already see it starting to try to push through here. But this cluster right here is a nice magnet. And then, of course, the top of the trend channel, smooth, easy number of 100 comes to mind. But before it hits 100, it's got to hit 99.25. So I would say that at this point, and we've got strong support down here at 92. So just to go ahead and draw that. Here's our strong support. And Andrew, what's your personal bias? Long, short, sideways, combination thereof? That's the beautiful thing about options, right? And not only long, short, but also time frame. Short term, long term. Seems like a big ABC rally on the weekly that hit its target. So yeah, you've got ABC. Yeah, you've kind of got a symmetrical move here and here. Could be a break, so you're thinking possible breakdown. Bought it at 280 on the way down before the split and holding for the dividends. Nice. Nice, very good. Look at where we've come from. In fact, let's go ahead and draw a much longer term fib from the ultimate top to the double bottom here. March of 2009 wouldn't have been good to just pick up so many of these stocks for a couple of bucks. So what I like to do when I'm drawing much longer term, I'll go ahead and I'll change the color to something that sticks out. So I know that those are the longer term. And look at that. You see that over here on the daily chart? You see how that yellow so check this out. The peak in 2008 to the bottom in 2009, the Fibonacci right here, and I'll drag this up over so I can, well, of course I can't read it. It's yellow. It's 38.6, I believe, right here. Edit. Well, that's the 38.6. This one is, I can't read that. I got to pick a better color. Does it make a difference? Does it matter? It's a good, beautiful, long-term fib. 61.8, it does matter. The 61.8 is considered to be the golden ratio, the magic number of Fibonacci's. If there's the most important one of all, it's the 61.8. So over here I can see the 61.8. Come on now. I need to put this back. Ultimate top, ultimate bottom. And there it is. So right up here, where I drew this line up here, right up around 100, it's got a great magnet, and it's also pretty much the top of this intermediate trend channel. Yeah. So, you know, interesting, we talk about stock splits. So a lot of people say that, well, you know, a $500 stock, 5-for-1 split, so it's what's the difference? Dividends. Dividends, and yeah, and there you go, because you even typed it in. You're holding for the dividends. Sometimes they'll carry the dividend forward into the split. Sometimes they won't. A little technicality. Asus, Kodak. Is Kodak still? I haven't looked at Kodak in a while. I'll be a son of a... I was just hearing that Kodak turned down, what did they turn down? They turned down GoPro. Kodak could have bought GoPro. It's sad when you think about all the companies of yesteryear. But then again, I'd go on vacations and spend more money developing my film than I paid for my trip. So Kodak's just bumping along the bottom here at about 18. We've got what looks like it could be a nice little triangle. We've got the 1, 2, 3, and then we're missing the 4 in a way. I mean, we've got this right here, 4 and 5. So I'm typically looking for the 1, 2, 3. I'd prefer to see it come up here, but it's over here, 5. But it's still, as far as I'm concerned, it's a decently formed triangle. So if we put in a bottom, you don't have too much to risk to the downside if you think that it's going to go up. What's your feeling about Kodak? Who was asking about that? Robert. Yeah. What time we got? 5:20. We got about another 10 minutes. So Kodak was in reference to an old big blue company, pretty much died. Yeah, you know, and isn't it strange? They could have they could have had GoPro. Instead, they made this other guy a billionaire.
Hey Jerry, have you ever used the 2B reversal pattern? It's like a variation of a 1, 2, 3 high or low.
2B reversal, maybe, but not by that name. If you want to...
Yeah, I'll paste in the chat. There's a web page that's got some graphs on it. One of my friends is a directional Forex guy, and he swears by this pattern. And I noticed on the daily chart of the euro, it just had one of these, and it looks like SPX is setting up for a possible pattern. You might want to put that in the URL in there so people can get a visual on what the pattern is. Basically, you have a high, it retreats off the high, and then the bar that pops through the high, use that as a low, and if it comes back through that, then that's your reversal price, if you will.
So it's kind of like looking for confirmation. It's one test through, and then another plunge back through. Is that it?
Oh yeah. If you see the link in the chat, if you click on it, then it'll pull up a page that actually has a graphic of what the pattern looks like.
Okay. Yeah, and I got sidetracked on Forex a few years ago. I know this guy. This guy lives down here, I think. He came to my meeting once.
If you scroll down a little bit, you'll see that, yeah, there they are, the graphics of what they look like.
Hmm. So you've got first level resistance that fails.
And then the bar that breaks through the high, the low of that bar becomes the signal that if it comes back through that, then that's your reversal.
Okay. Yeah, sure.
The euro looks like it just did that.
Okay. Let's take a quick look on a daily chart, all right? So you've got basically this resistance level right here.
Yeah, look on like the last 3 months.
And yeah, I mean, that's been sideways. You've got this potential W pattern here, which once it broke the midpoint was a good spot to go long. But now we're stuck inside this congestion. And then you've got, once it broke over here, right? You're talking about which level, right? Is it right? Which bar?
Yeah, I was looking at the that red high on around May 5th or 6th, something like that.
This one right here.
Yeah.
So
and then the bar 3 bars ago popped through it, so the low of that bar would be your signal to go short.
Okay.
So
okay, yeah.
that pattern on a couple month time frame here, then that could be a possible signal that the euro might be headed a little bit lower, which I wouldn't complain about.
Very well could be. You've got so many fundamental reasons why it could be going. You're saying that the same signal is kind of like potentially popping on the S&P?
Yeah, I mean, it had a high, then it retraced, and then it broke the high again. And so now we're going to see if it comes back down through that bar that broke the high.
So I would say I would be looking at it right here, where I'd say if it breaks below there, which would put us back into this triangle right here.
Yep.
Yeah, very well could be.
Anyway, just some patterns. It's a good one for people to be aware of.
For sure. A long time ago, I'd seen Jake Bernstein give a presentation where it's just the simplest trade ever is that, while you're in an uptrend, if you've got a bar that, goes up and then you've got one that comes down, so then you go long above here, stop losses over here, and it's really quite simple, especially if you're going to be either, using 3-minute tick charts or something on a day trading, or even if it's a daily or a weekly chart. It can keep you out of trouble. Add that 8 exponential moving average to the bag of tricks, and it keeps you on the right side of the trade.
Yeah, Joe DiNapoli had a nice trick. He displaced that moving average and used it as a stop. So he would move it forward, like, I forget how many bars, but it was actually displaced forward in time.
Sure. Great techniques. All right. Jim, we got about 5 minutes left. I got my phone ringing, 800 number.
No, that was it from my side. I don't know if anybody else has any things they want to end up seeing, but thank you.
Yeah, thanks, Jerry. Really appreciate it.
All right. Well, the bell's ringing, and thank you, everybody, for the week ahead here on Capital Discussions here, May 18th, 5:30, and see you again next week.
All right,
God
everyone.
willing. Good trading.
Good night.
Good night.